Hey traders, welcome back to the Forex Edge, your go-to source for real-time market insights, strategy breakdowns, and everything you need to stay ahead in the currency markets. Today is March 28, 2025, and we've had quite an eventful session across major pairs. We're going to break it all down, pinpoint key levels, and get you set up for the next trading day. So, let's dive in. The Dollar Index, DXY, Market Pulse. Starting off with the US Dollar Index, we saw some notable movement today. The DXY hovered around the 104.20 level early in the session before dipping to 103.80, largely driven by softer-than-expected US economic data. The latest GDP revision came in slightly below forecasts, sparking speculation that the Fed might have to reconsider its tightening approach. Key takeaway. The dollar is still holding a strong position, but it's showing signs of hesitation. If this weakness continues, we could see further downside momentum leading into next week. Euro to US dollar, the euro's response. The euro capitalized on dollar weakness, pushing euro to US dollar back above 1.0850. The pair initially struggled with resistance around 1.0825, but as the session unfolded, buyers gained control, driving it toward 1.0870 by the close. What's next? If the euro can maintain strength above 1.0850, the next upside target could be 1.0900. However, any hawkish Fed commentary could cap gains and push the pair back toward 1.0800 support. Pound sterling to US dollar, pound holds firm. The British pound saw a relatively stable session, trading between 1.2630 and 1.2700. The Bank of England's recent stance on inflation has kept traders cautious, but the pair remains well supported above 1.2600. Going forward, if the dollar weakens further, pound sterling to US dollar could test the 1.2750 region. But if risk sentiment turns, a pullback toward 1.2580 is possible. US dollar to Japanese yen, yen strengthens amid risk-off flows. A shift in risk appetite saw US dollar to Japanese yen retreat from its highs, falling from 151.00 down to 149.80. Traders continue to watch for any potential Bank of Japan intervention as the yen remains in focus. Outlook. If we break below 149.50, we could see an extended downside move. But if US bond yields tick higher, expect renewed upside pressure. Gold and commodities, safe haven moves. Gold prices pushed higher, breaking past $2,200 as traders sought safety amid market uncertainty. This rally was fueled by a weaker dollar and lingering geopolitical tensions. Future levels to watch. If gold holds above $2,200, the next resistance is around $2,230. On the flip side, support sits at $2,180. Looking ahead, next trading day game plan. So, what's on the horizon for the next workday? A few key things to keep an eye on. US PCE inflation data. This is the Fed's preferred inflation gauge, and any surprises could shift market sentiment. Eurozone CPI report. A higher print could reinforce ECB hawkishness and push euro to US dollar higher. Technical setups. Keep a close watch on euro to US dollar above 1.0850, US dollar to Japanese yen at 149.50, and gold's $2,200 support level. That's it for today's episode of the Forex Edge. If you found this breakdown helpful, make sure to subscribe, leave a review, and share it with fellow traders. We'll be back with more insights, setups, and strategies to help you navigate the Forex market like a pro. Until next time, stay sharp, stay disciplined, and happy trading.